Welcome to Invest Out West podcast. I'm Nat Micken.
And I'm Kahlia Micken. We are a husband and wife team who live and invest in Western Queensland.
Join us on our journey of creating passive income through mindset, business, crypto, and property investing. Welcome to Invest Out West podcast number 17.
Today we'd like to leave with a quote from the late Charlie Munger that says, "People calculate too much and think too little."
Yeah, so today's just going to be a quick podcast. We're just going to do this podcast on the company called National Storage. Now, National Storage is a REIT, or otherwise known as a real estate investment trust. Now, their ticker on the ASX is NSR. Now, they are the largest self-storage company in Australia, and they've been operating since the late 90s, sort of under different banners, I believe, and then the actual National Storage branding sort of started in about 2000. They first were listed on the ASX on the 19th of December 2013, and as we speak, they have over 200 facilities. Now, we started buying those shares in, when was it? The 11th of the 5th, 2022. We started buying those shares. Now, the price today sits at $2.18 per share, and they have our last dividend payment on those shares were 5 cents per share for the year. So, I just wanted to talk briefly about this company, simply because we have, as regular listeners would know, we have self-storage facilities in Western Queensland. So we've got three different facilities now, like in 3 different towns, and sort of that is our focus, is like having these facilities in sort of more outback locations. But when we sort of started down this path, we sort of realised that it would also be good to have exposure to like a bigger centre, bigger cities, that sort of thing, with self-storage as well. So that's why we went ahead and bought shares in National Storage. So we're sort of it's nearly like we're having a bet each way, where we've got like our own facilities that we own ourselves in inland Queensland, and then we've also got the exposure through the REIT with owning shares in that company that have self-storage facilities in big cities all over Australia and New Zealand. So that's sort of what I wanted to just point out, that people sort of I just believe people can get too caught up in thinking that it has to be one or the other. But we have a motto that we live by, and rather than or, and so when sort of a lot of people sort of think they have to do it like this way or that way, whereas we say no, we believe that we can do it, and so we have this thing and that thing. So that's our line of thinking when we bought these shares, just so that we could have a foot in both camps, so to speak. That's probably about all I've really got to add on this. Kahlia, do you want to add anything to that or not?
Yeah, no, not a lot really. I guess the only thing to point out is the difference between the returns that we get from a shares point of view compared to owning your own facilities. So of course you have a lot more a lot more risk, and a lot more, I guess, behind the scenes work when it comes to owning your own facilities. But in the long run, the yield and the return that we can get from managing and owning your own facilities is through the roof compared to what we can earn from a share portfolio. But like Nat has just said, it's just a case of, I guess, it's another way of being diversified, really, just having our fingers in multiple pies, because this is it. The city isn't our target market, but we can still be an investor in those areas. So yeah, that's sort of all I would say is just I guess I would touch on too is that we're not overly passionate about holding shares as a major part of our portfolio, but it is just another way to diversify and to spread our risk, I guess.
Yeah, definitely. Diversification is what we're all about. So yeah, like Kahlia just said, the bigger reward is there in owning your own facilities, but it's a case of just sort of spreading our risks, and if things don't work out with our own facilities as much as we'd like to, then we always have this like up our sleeve, I guess you could say, with owning these shares in self-storage in a different demographic. So yeah, that's like I said, this podcast was going to be fairly quick today, so I think that's about all we have to share for this one, and keep living the dream.